A very good afternoon to everyone from Team and Access Securities. Welcome to this session on Access Topics and Market View. So we have with us Mr. Naveen Kulkarni, our Chief Investment Officer with us, who will be sharing his view on equity markets and investment picks. Once the session is over, we'll throw the session for question and answers. You can put in your questions in the chat box. We will also give you a brief demo of our equity SIP and e-margin product, which you can use for investing in these recommendations. So without further ado, handing over the session to Mr. Naveen Kulkarni, who will be taking us the session today.
Thank you, Dheer, and good evening, everybody. Thank you for, first of all, thank you for taking time out to join our session on equity markets. I hope everybody is staying safe, and I think we are somewhere close to coming back to, I would say, that good times from a real life perspective. Of course, the equity markets have been rocking, so that is something very, very exciting, and we will be talking more about that. But from a personal life perspective, I think we have had challenges in terms of staying at home. We have had so many things to worry about. But I think so with the vaccination drive and with the cases starting to come down, I believe there is light at the end of the tunnel, and we are seeing that right now. So that's something which I take heart from, and this is so I am right now much more encouraged by what is happening around the world and what is also happening in India. And this is something to be now looking forward to with lot more optimism than what we were probably a couple of months back when things looked like really bleak. However, let us talk about equity markets. What are things I would be covering on equity markets? I'll be covering topics like what are the themes which are driving the equity markets. Second is the earning season which just got over. What happened there, and see, and what is the inherent strength which is driving the markets, right? So these are the broad factors and parameters that we are looking at. So I would suggest everybody to hold on to their questions for a bit. This presentation is not very, very long. I'll wrap this presentation up in 15 to 20 minutes, and post that you can post your questions in the chat box, and I will make it a point to answer as many questions as possible, if not all the questions. Right, so pretty much we end up answering most of the questions. So don't worry, please wait for the presentation to conclude and then post your questions. So without further ado, I'll kick off my presentation with what is it that we are looking at. So of course the market is now awaiting a prompt opening up of the economy. Access topics. This is a session on topics. These are our top ideas. I'll be talking about top ideas and where we are right now, and essentially where the market is now at an all-time high, and what are the ideas that can actually beat the market. So access topics, we started this last May, and the access topics have delivered a 78% return since last May. Right, market has delivered around 65-66% return, and access topics have delivered 78-80% return. Right, so we have the returns are quite fabulous in topics. Last month alone, in the month of May 2021, the return for top picks was around 10%. Benchmark was up around 6.5%. So I think top picks have been doing quite well. Right, so this is a mix of reasonably high quality stocks. We are not like buying pretty much I would say that things where there are huge amount of challenges, or there are corporate governance issues. These are like reasonably high quality companies with strong business models that we are talking about. So what is it that's happening right now? What are the themes that we need to look at? I will be taking you through that. This is a slide on topics. I will be coming back to this slide in just about a bit once I finish off some of the key slides. Where are we in terms of markets? We are now at an all-time high. Today also the market was flattish, but yeah, pretty much yesterday was a good day again. We are around about at 15,582 was on 31st May. Again, the markets have done phenomenally well in the last month. Very, very strong rally. If I were to look at what is driving the markets in terms of top 20 stocks in Nifty versus top 40 stocks and next 40, see if where we are right now, the market is at let's say 15,582. This is the end of 31st May, which is where the month closed at an all-time high. If it would have been only the top 10 stocks, the market would have been at around 70,200. This is the looking at December 2017 as a base. Whereas if it would have been the next 40 stocks, it would have been at 13,599. Point is that the last year the market has been quite broad based. So that's a very, very interesting thing. Right? It's not that only a few sectors which are rallied. Earlier, this used to be the top 10 stocks used to be up by 20%, the next 40 stocks used to be minus 20%. So that is the fundamental difference now. The rally has become much more broad based. If we look at what is actually driving the markets, of 15 Feb is when we hit an all-time high, and thereafter there has been correction in the markets, and from there we are just about 2% high. But there are a lot of sectors which have done pretty well actually. So metals and mining, which has done well. There is agri and chemicals, which has done well. Transport has done well. Industrials have done well. Of course, the interest rate sensitives have taken a little bit of breather, but again, the defensives also have done pretty well. In terms of what has happened is that, of course, Nifty has pretty much recovered, but I would say that mostly there is a very large number of companies, more than 75% of the market has delivered actually very, very good returns. So that means the market has been very, very broad-based. In terms of how it has performed quarter by quarter, so this is a very, very interesting chart, right? So Nifty 50 from April to May is up 6%. Last year, March was minus 29%. Then in the June quarter, it was up 20%. September, it was up 9%. December quarter, again up 24%. March quarter, up 5%. And April, May is again up 6%, right? So that's very, very interesting. But again, the important thing is to look at sectors, right? In last quarter, May, auto sector was minus 43%. June, of course, it bounced back to 42% because there was a pent-up demand. September was 18%. December was 16%, right? And then, of course, March was around 7%, and April, May is around 6%. So auto has been actually doing pretty well. Banking, of course, is a very, very interesting sector. Banking was one of the sectors which suffered the most. June quarter did not do well. September quarter it was flat. December quarter is when banking sector picked up its steam. So December quarter it went up by 46%. March quarter up 7%, and the April May again started to do well. PSU Bank is a very, very interesting space now. If you see PSU banks, last year March quarter it was minus 48%. June quarter it was up 8%, but September was again down. December 37% it up December quarter, March of quarter up 23%, and April May is again. So PSU banks have been doing pretty well. That's a very, very interesting thing. Please remember this, that PSU space is starting to hot up. It has actually outperformed the private banking space by a fairly large margin in the last 6 months. Please note, this is a very, very important point to note here. Top 500 stocks, where do we stand in terms of overall market capitalization? We are at 204 lakh crore market capitalization. Whopping number, right? So where we are, this is from, let's say, February 20th was an all-time high before COVID, which was at 152 lakh crore. From that to 204 lakh crore. So we are up even from pre-COVID levels, from an all-time high pre-COVID level, by almost by around 30%. I'll come to the factors what is driving this rally and whether this is sustainable or not. This is, of course, in terms of what has done well, defensives. It's pretty much everything has actually performed, except for, let's say, the PSUs of the world. Everything else has done reasonably well in the market. Market volumes have been pretty strong. Very important factor. India Valuation Index indicates some bit of profit booking now. However, what I can say is that if we look at the bond earning yield index, we are at normal. It's the market cap to GDP ratio, which is at 2 standard deviations above normal. Price to earning is above normal, but price to book is just about 1 standard deviation above normal. So it's not something which is very challenging to worry about. But important factor is that we should look at the valuations in conjunction with the earnings growth. So that is very important factor. Mid caps are, of course, attractive compared to the large caps. So this is another very important theme. Mid caps are trading at a discount to large caps, and mid caps have a higher earnings growth potential, right? So whenever the economy rebounds, mid caps and small caps tend to have a higher earning potential, and that's why actually, if they are trading at a discount, then it's a good theme to look at buying mid caps when we are looking at large caps. Right? So mid caps and small caps are likely to still do well. This is the rolling returns of mid caps versus small caps. So mid caps, of course, were minus 40% compared to the large caps. Now they have come back to again a positive trajectory. This can sustain. Mid caps versus large caps can still do well over the next 6 to 12 months. Mind you, this is a very important theme which is playing out right now. This is the important factor, right? So when we look at valuations, of course, it looks expensive prima facie. But when we break down the valuations across sectors, right, that is when the picture emerges, which is a little more clearer. Nifty is at 20 times earnings, right, which looks prima facie expensive. But if I were to break it across sectors, realty, of course, is a different sector. So not necessarily P/E is a right metric to look at. But most of the other sectors, we look at price to earning ratios. So that's a decent metric to look at. If we look at FMCG, we are at around 32, so not very expensive from a long-term average perspective. Pharma is little expensive. IT is expensive, but IT is in a different growth trajectory. That's a very important thing. They're very large deals. Even the mid-cap IT stocks have started to win large deals. So there is a strong tailwind. Auto is a challenging sector because there is a challenge of input cost plus the pent-up demand. Maybe it will come, maybe it will not come. But leave that sector aside, infra is at an average. Banks are not very expensive. PSU banks are actually at an average. Banks right now, if I were to compare versus the last 10-year average, the bank's balance sheet is at the best right now. So from that perspective, banks are not very expensive because the quality of balance sheet has improved significantly. Media is, of course, cheap. Energy is cheap. PSU banks are cheap. Metals are cheaper, right? So essentially, overall perspective, where the earnings contribution is coming, they are not very expensive actually. So break it up to a sector, valuations are not very expensive. Volatility index, of course, where volatility index stands right now, the lower the dotted line is the volatility index, the black dotted line. We are lesser than 22, which is the long-term average. So essentially what it means is that we are not very much spooked by where the market is, right? So it is not very troublesome to be looking at markets at this scenario. Markets are not that jittery right now. We are quite okay actually from the volatility index point of view. So what this means is that if volatility index remains low, mid caps and small caps are more likely to do well. Of course, the FIs in the last FIs have added around $0.4 billion in the last. So both DIs and FIs are added. So all around the buying has been happening. FIs actually bought close to $37 billion in the last FY21. So whopping amount of liquidity has flown into the Indian equity markets. This is very interesting. What happened in the last 1 month in terms of various sectoral indices? India has, of course, outperformed a lot of global indices. That is very interesting. Nifty is up 6.5%. Shanghai Composite is 4.9%. OSPI is 5.8%. Russia, of course, is higher than India, but South Africa is lower. Dow Jones is lower than India. Nasdaq is actually contracted, right? FTSE 100 index, we have outperformed actually most of the larger indices in the last 1 month, of course. 3 months, of course, our performance has been reasonable, not very off. More importantly, if we look at the indices, everything is in green. That's a very important factor. Last 1 month, everything is in green. So that's a very strong indicator of the performance. What has outperformed? Of course, we know typically mid caps, small caps, these have been doing well and they will continue to do well in the next 1 year. In terms of positive outlook that we have from a market perspective, of course, IT, pharma, consumer staples, telecoms, these are export teams. These are the positive outlook. Challenging, of course, BFSI will see some bit of challenges in the near term. Auto, of course, could see challenges. Discretionary consumption, I think we are now in unlock kind of a theme. So that means which will slowly unlock, but not everything will pick up fast. Metals and, of course, others are still well placed, so they will continue to do well. What happened to commodity? Of course, there was some bit of compression in steel prices, which is because of the 1 month. We are entering a slightly slower zone, but I don't think so. Where the steel prices stand today, the company is still going to make a lot of profit. So nothing much to worry about. In terms of what are the style indices which are done well, of course, value as a theme has come back roaring in the last 1 year, and it has outperformed pretty much every other style index. So that is very, very important. Quality has done well. Value and quality are the two style indices which have done reasonably well. Consensus estimates, this is very important, right? So what happened in the last quarter, right? Almost most of the companies have now reported numbers till 31st. This is collated data. We see that 31 companies out of the 44 companies have actually beaten estimates. So almost 70% of the companies have met or beaten estimates, right? So that is very, very encouraging. Right, key upgrades we are seeing Tata Steel, JSW Steel, yeah, all the commodity companies are seeing upgrades. Ultratech is seeing upgrade, UPL is seeing upgrade. So these are very nifty companies. And of course, some of the other companies like, of course, ICICI Bank saw an upgrade, Wipro saw an upgrade. So the key downgrades were, of course, Maruti, some bit of downgrade in Titan and Britannia, right? So these were the downgrades in the last quarter, right? So overall earning scenario is quite encouraging. The next slide is very, very important. So what we see after Q3, the Nifty EPS was 688 for FY22. After imposition of lockdown and all the challenges, Nifty EPS has still moved up. The reason I'll tell you, financials there has actually been a marginal upgrade. Okay, after Q4 earnings, right, from 250 to 253. IT there has been a marginal cut. Oil and gas, of course, because of cut. FMCG there has been cut. Power, of course, there has been cut. But metals, there has been a whopping 30% upgrade. So metals, if you see after financial services, IT, oil and gas, metals is now contributing 77 rupees EPS to FY22 earnings. So that's whopping number, right? And of course, automobiles is flattish. These are the things. Right? So overall, I would say that the earnings are still looking quite reasonable. So point that I'm trying to make is that whatever is happening right now for the larger indices, it is backed by a lot of strong earnings growth that we are seeing. Macro indicators, of course, Q4 GDP was better than expectations, not so much to worry about. Q1 will be something that we need to see whether everything is factored in, but unlocking is going to be a good theme to look at. So this is where we are in terms of overall market. We are seeing valuations, of course, sectorally, it doesn't look that expensive. Overall, it might look little expensive, but when we break it down into sectors, it's not that expensive. Market is doing pretty well. Earnings, there is a traction in earnings. There is consistent growth. Volatility, we are not so worried about in terms of volatility, right? So that's another theme. So overall, what I can say right now is that the themes which are working well for the market are mid cap, small cap are doing well. Large cap value is doing well. PSUs are another theme to look at. Valuation wise, we are not too scared, and there are sectors which are reasonably valued. Balance sheet wise, we are in good shape. Right? Only challenge could be the near-term challenges of the earnings slowdown, which will happen in Q4, Q1. But post that, I think we should be in good shape. What are our topics in this context? Top ideas are, as I said, ICICI Bank saw an upgrade in earnings, so ICICI Bank makes the cut. State Bank of India reported phenomenal quality in terms of their books. So essentially, State Bank makes the cut. Federal Bank is doing well. Equitas Small Finance Bank is a microfinance company. It's a high beta name, but I think it can do well. Varun Beverages, I think it's a good unlocking theme, doing well. Camlin Fine Science, since we initiated coverage, the stock has run up almost 60%. So again, continues to do well for us. We introduced Moltech Packaging and PI Industries. Both these companies are very interesting plays. One can look at these companies. Amber Enterprises is another company which is into which is a Make in India theme. Looks good. Minda Corporation from autos looks good. Steel Strip Wheels is a good play on the CV cycle. So another company which makes the cut. Lupin from healthcare makes the cut. Tech Mahindra, Bharti Airtel, HCL Technologies, and ACC. These are our top picks. These have been doing quite well. So please look at these top picks and focus on them and try to invest in some of them which can give you good returns. So this is a mix of good small cap, mid cap, and large cap. For example, look at Camlin Fine Science, Equitas Small Finance Bank. These are the small steel strip wheels, the Minda Corporation. These are our small cap stocks. Mid cap stocks are stocks like Varun Beverages. In fact, Moltech Packaging is also a small cap stock. right? So mid cap stocks are stocks like Federal Bank, then Warren Beverages. These are a small cap. Then the large caps are of course ICICI, State Bank, HCL, Bharti Airtel. These are our large cap picks, right? So we are quite well spread out. There are good quality large cap, there are good quality mid caps, and good quality small cap stocks that we are looking at, which can add value. Please focus on these names, and I think they can deliver good results. So right now, what I'll do is that I will start taking the questions. I'll wait for the question queue to assemble. So please post your questions in the chat box. Meanwhile, Dheer will do a quick presentation on our eMargin product and the on the emerging product and the equity SIP, and post that I will start answering the question. I'll just wait for a bit for the question queue to assemble. Please post your questions in the chat box. Over to you, Dean.
Thank you, Naveen. I'll just share
Yeah,
my
so
screen. Yeah, thank
just 1 minute. This presentation is available on the website in the name of topic. So you can download the whole research report where the detailed rationale of all the companies is given. This thing is available. So please go through the presentation. It's a very detailed and comprehensive presentation which is available. So please go through that. And if you have any doubts, you can always write back to us. Sorry, the over to you, Dean.
Yeah, I'll just share my screen and give a brief demo on equity SIP and eMargin product. So once you log into your account, you just have to click on place order. Once you click on place order, I'm assuming that we are placing order for any particular stock. Let's say ICICI Bank, which is one of a part of our top picks. So ICICI Bank. So just click type ICICI Bank, click on buy. Once you click on buy, by default it will be cash. Assuming you're buying 100 shares, you want to buy 100 shares at 640. So for buying 100 shares at 640, you require around 64,000 rupees. Now we have a product called eMargin. When you use this product, you can hold on your position for next 90 working days, and instead of 100 shares, you can buy 250 shares. That is 2.5 times more shares with the limited funds. That is the beauty of the product. And you just have to click on convert. Once you click on convert, your product will change from cash to e-margin. Quantity would change from 100 to 250, and price would be same of yours, and you can continue to place order. Here, in case you don't want to go for 250 shares and you just want to go for 100 shares, you can change quantity to 100. So instead of 64,000 rupees for buying 100 shares, you just require 25,600 rupees. So you're blocking less funds, you're buying more shares. The difference amount, that is around 26,000 rupees of difference amount, interest would be charged to you for how many days you're using. For example, you buy today, and for next 5 days you hold on your position, and on the fifth day you book profit. So you will be charged interest, that is 18% compound, calculated on daily basis. Just 0.05% is would be charged for 5 working days. If you use for 5 days, if you use this position for 2 days, if you hold on for position for 2 days, then 2 days interest would be charged to you. So it is these are for long term, 3 months, 6 months, 1 year recommendations. So if you're looking for long term appreciation, you get some short or in short duration. If you get 4-5% return, you can exit your position. You get decent returns, and you pay hardly any interest on your position. The second product is equity SIP. Now, next to buy, sell, there's SIP. You click on SIP. The same stock ICICI Bank, since markets are near their high, and near the high, stocks are near their lifetime 52-week high. So you want to systematically invest. Not You don't want to invest everything at one shot. So we have a product called equity SIP, wherein you can choose your frequency. Like mutual fund SIP, this is equity SIP. The frequency can be daily, weekly, fortnightly, monthly. So we go for monthly. You can either choose quantity or amount. Assuming you are going for amount, let's say 10,000 rupees. Start date can be from tomorrow. can choose 12 months, 24 months, up to 60 months. Let's say 12 months. Basket can be bank or any name you want to keep. You have to click on I accept and you can start your SIP. It's that simple. You're, you're given instruction that every month at this particular date 10,000 rupees would be invested in specifically ICICI Bank. So you're not timing you are not timing the stock. Systematically, you are investing every, every month for next 12 months. It will give you you can take the benefit of value cost averaging, where you average if the stock continues in the same range or at a marginally higher range, your cost will gradually come down, and you can make some good returns. Now I'll also show you how to track our recommendations. So there are investment ideas wherein you have to click on research. Once you, I'll just go back. You have to click on research. In research, there are research ideas. In research, there are investment ideas, trading ideas. I'll go for trading ideas. These are short-term recommendations where UTI AMC is there, Gujarat Alkali is there for 5 to 15 days. Then future option recommendations are also there, which you can see. Long-term 15 days, 1 month recommendations are also there. Now, if you want if you want to go with UTI AMC, you want to buy, it's near the buying range. You want to buy, you just have to click on trade and it will lead you to the order placement page. So you can directly place your orders from here. Then investment ideas are there. These are long-term recommendations. Like APL Apollo tubes are there. This is for next 12 to 18 months. Escorts is there, which is a pick of the week. Every week we get one recommendation for 6 to 9 months. Dixon Technology is there. That's a result update for 12 months. ECC, HCL Technologies. These are some recommendations which we just short topic recommendations. Part of topic recommendations. Now, if you want to read research report, as Naveen ji had told, so you can read research reports. You can download our research report, investment reports from here. So pick of the week is there, fundamental report is there, event update is there, topic recommendations are also there. So you can just if you want to read this pick of the week report, you can just download the report and read it as per your discretion, as per your availability of time. Now, if you want to equity SIP recommendations are also there on the right hand side, on the extreme right, SIP ideas. So if you click on SIP ideas and you want to know which recommendation, which equity SIP stocks we are recommending, so there are 7 set of stocks: Bajaj Finserv, ICICI Bank, Reliance Industries, L&T, ITC, Maruti, IndusInd Bank, ITC. So like Bajaj Finserv has given decent returns. If you look at last 3 years average annualized returns, Bajaj Finserv has given 31%, 37% annualized return. Investment of 3 lakhs have become 6 lakhs 50,000. That's a monthly investment of 5,000 for last 5 years. You can see the graph also. So you can track our recommendations and start equity SIP directly from this page also. So that's it from my side. Handing over to Naveen ji for taking over for question answers.
Thank you, Deer. So let me just go through questions. So there is a question on what is your view on IG Petrochemicals, Sterlite Technologies, Novartis, and Glaxo Pharmaceuticals. So as far as IG Petrochemicals and Sterlite Technologies is concerned, I would say that Sterlite Technologies is an interesting company because of the exposure to fiber optic cables. So that's something which is interesting to look at. Glaxo and Novartis are again long-term compounding plays. They will deliver a 10 to 12% return annually. I don't expect them to deliver a runaway kind of a return, but again, these are all very, very expensive stocks, so we can't expect huge return from these companies. As far as IG Petrochemicals is concerned, I'm not very comfortable with the name, so I will not talk more than that, right? So it is a stock that I will not recommend at this juncture, right? So that is the idea that I have. Uh, Next, of course, can you recommend any stock outside Access Direct recommendations? See, we have a coverage of 110 stocks, so we can go through our research reports to look at any of these names, right? So these are something which are interesting to look at. If you are like really one wants to look at something, then I would say that look at a company called Rain Industries. So this is a company which is into manufacturing of CPC and coal tar pitch, which is used for aluminum smelting. The prices are going up. And of course, it's a well-run company, so that's something which is interesting to look at. So they just asked me one company to look at from outside, let's say Access Securities. So I'm just giving a name, which is a personal recommendation from me. It's a good story from a long-term perspective. Let's say that you hold it for a couple of years, probably there is a good chance that you will be able to double your money. So that is my recommendation. So the target price can be 350. Current price is around 185. Sun TV. Okay, Sun TV is an interesting business. I think one can look at it. I think has got good cash flows. Valuations are cheap. Media, as I said, is a sector which is much cheaper than the market. Definitely, one can look at Sun TV. Info Edge and Axis Bank. So Axis Bank, I can't comment. It's a parent company, so I cannot comment on Axis Bank. Info Edge, of course, has got a lot of levers, which is essentially Zomato listing and other things. So yeah, so that's about it as far as what I can talk about from Info Edge Naukri perspective. So it's an expensive stock. It's a concept stock. One looks at it from a holding long-term perspective, might deliver returns. But I think that there are a lot of other ideas which are there in the market which can be interesting. As is mail, can you get the slides on the mail? Yeah, these are of course available on the website. You can go to our research section, find out. You can type in topics, and you will find this report. What is your opinion on Bafna Pharmaceutical? Will it be a good buy? I have no idea about Bafna Pharmaceuticals. I'm very sorry on that. What is bought SBI 343? SBI is a good stock to hold. It can go up to 500 easily. So good stock to hold. Karnataka Bank, again, a very complex story. So the company does not have any history of generating good returns for its investors. So I don't see a reason why it should do now. So it might just be a story that everything goes up and Karnataka Bank might also go up. So it's that kind of a theme right now. View or short-term, long-term or targets I cannot right now specify, but Tata Power is a good stock to own. Good stock from a long-term perspective. Z Enterprises, I think it's an event-based play. PNB Housing Finance is again a different story altogether. Reliance Power, I will not comment on Reliance Power. I'm really very sorry on Reliance Power. Infibeam Avenue, another company which I would not like to comment at this juncture. I am not very comfortable with the idea. Bajaj Finance, Syngene, Tata Consumer, Avenue Supermarts, Whirlpool, Ujjivan. Okay, so these are, please advise if I need to shuffle. Okay, Bajaj Finance is something where some bit of profit booking can be done. Syngene is again another company where some bit of profit booking can be done. Tata Consumer, you can book some bit of profit. Avenue Supermart, also we can book some bit of profit, right? So Ujjivan is still a good stock to own. Whirlpool is also a decent stock to own, but others we can book some bit of profit and we can reshuffle. We can add some of these names that we are talking right. What is your view on McLeod Russell? Again, a tricky play. I think a lot of commodities have moved up. So again, McLeod Russell is also doing some rounds. So my sense is it might be a good story to own, but I think long-term challenges are there. I'd rather invest in sugar sector, which has got a little better prospects because of ethanol blending. There's a structural play happening there. So that might be a better sector to invest in if I were to look at, let's say, Triveni Engineering or Dalmia Bharat Sugar. these might be more interesting place to look at, or the equipment manufacturer, large industries, which is are more interesting to look at look at sugar sector rather than getting into something like in McLeod research. So if I asked any similar stocks that you recommended with it, so again, this is a stock which has these are stocks which are more than doubled in the last 3 months, but I think are still interesting stocks to look at. Future group shares I'll avoid. Sun Pharma, Manappuram Finance, and Maruti. Maruti has got still challenges. I would wait after Q1 results. Probably that's when I'll start looking at Maruti. Sun Pharma is still a good bet. Manappuram, I think, is an interesting bet to own at this point in time. Muthoot has rallied quite a bit. Manappuram looks exciting from that perspective. Manappuram is a buy at this level. Infosys versus TCS, I think equally balanced. Both you can look at Infosys or TCS. Both will deliver good returns for you. I don't think so. The returns are going to be any bit significantly different between the two companies. Maybe TCS might deliver slightly better returns now, is what I feel, because of a rather more diversified deal wins that they are having. So I think probably TCS has a slight edge, but give or take here and there, I think both the companies are very well placed. Future Group. Please repeat the name of your recommendations. I said Rain Industries is one stock which can double in the next 2 years. It was a question which was asked to me, so I am giving that name. Apart from that, I also gave what names for a play which is similar to McLeod Russell, which is a tea company. Then there are, I said that sugar companies one can look at. One can look at, let's say, a Dalmia Bharat or a Triveni Engineering, right? So, or a Praj Industries. These might be interesting companies to look at outside, which are sugar related plays because of ethanol blending. Britannia, Hindustan Unilever, and Cipla. Cipla is well placed. One can buy Cipla. Britannia, I think there are some margin challenges, so I will wait. Hindustan Unilever is well placed. I think it will deliver a good 10 to 12% return. Airtel is a good play from a long-term perspective. I think we'll make 15 to 20% from the current levels on a CAGR basis. So that's something that we can look at from Airtel. DMart is again a good story to own, but it's very, very expensive. That's the only challenge that I face with DMart. Otherwise, it's a good stock to own. It's become more of a trading play. So at this price, I will not buy. Probably a 10% correction is where I would start looking at it. PNB, I will avoid. The numbers were not that good. PNB, UCO Bank, Union Bank numbers were not really good. So I will wait for some time for that to improve. But instead of that, I can look at Bank of Baroda. The numbers were not that bad for Bank of Baroda. Future Group, I'll avoid. Varun Beverages. Varun Beverages is still a good company, right? So Varun Beverages is something that I will still be invested in. Dilip Buildcon is again is an interesting company. It's a good play on the infra plays, but again there can be these are of very cyclical stocks, and one has to be very careful and be very patient. IDFC First Bank is a good bank to own. Tata Chemicals is a good story, but I'll wait for some. Aditya Birla Fashion, this is one of our favorite stocks. One can definitely look at Aditya Birla Fashion from an economic reopening point of view. People coming back to office. I think because of the vaccination drive, the confidence index is going to go up. More people are going to turn up to office, and there will be increase in formal clothing. So Aditya Birla Fashion owns pretty much all these brands like Van Heusen, Louis Philippe, right? So Aditya Birla Fashion should be a beneficiary. They also ventured into the high quality, the Indian ethnic wear segment, right? So I think Aditya Birla Fashion is a super play that one can look at this juncture. IEX I will avoid. I am Ultratech can touch 10,000 in this year. Maybe yes, maybe not. I can't be sure whether what price it will touch, but I think Ultratech can still outperform the cement sector. Asian Paint, I think, is good. Rain Industries, I already answered the question. So Rain is good. Tata Chemicals, I would say, is a good stock, but again, it has run up quite a bit based on lot of rumors in the market. So I will be little. It's a good company, but I think the valuations are expensive, and the run up has been a little more than what we would have liked. Yes Bank long term, I don't see a future for Yes Bank at this juncture. Maybe after a year or so, things might open up, but at this point in time, I am not very clear. Pector Food and Pilani, Pector Food, I am not very clear at this point in time how to look at it. Tata Coffee, I don't have a target on Tata Coffee. Britannia, Hindustan Unilever, and Cipla. I said Cipla is a good stock to own, so one can generate a 10% return. Hindustan Unilever, again, a 6 to 7% return is possible. Britannia, I will avoid at this juncture. Muthoot Finance, I would rather buy Manappuram than Muthoot Finance at this juncture. Century Plywood. There are so many other companies. One can look at Green Panel Industries if one wants to look at an plywood or an MDF kind of a place. So I would rather look at a Green Panel Industries, which is seeing phenomenal growth in its product profile and also is seeing good amount of EBITDA growth and traction and capacity utilization. So that's something that I will look at. So many home innovation is an interesting stock to look at. So home related companies are doing well. Tata Chemicals, again and again, the same question is coming. So Tata Chemicals is something that I will avoid at this point, right? So it's an interesting company, but again, the valuations are very, very expensive. Tata Chemicals, the valuations are very expensive. I'll repeat it two more times. Tata Chemicals, the valuations are very expensive. The run up in the stock is because of so many factors which are not led by fundamentals, like they might do produce batteries for Tesla and all. I have no view on those things, right? So I can't comment, right? So things might happen, things may not happen, but that's the way it is, right? So I will not be I will not be gung-ho on rumors on Tata Chemicals at this juncture. Indian hotels and Taj GVK, I think hotels business are still messed up. They will take quite a bit of time to revive. So I'll be very, very careful about hotels business still. Action construction equipment, there's a lot of interest in action construction equipment, but I don't have a strong view on the company, so I can't comment more. But what I can tell you is that there is a lot of interest in the market in action construction equipment, but I don't have a strong view. IDFC Limited, yes, it's an interesting stock to buy, both IDFC Bank and IDFC Limited. And if one wants to choose between IDFC Bank and IDFC Limited, then probably IDFC Limited might give you a more alpha. Favorite stock, ITC. I think it's a dividend yield play. Let's be very, very clear about it. I do not know whether the earnings traction is still coming there. So I think I will be very, very focused on ITC from a dividend yield perspective. I will, even if the one does not expect more, then probably it's a good stock to look at. It's not a stock which will give a huge return at this point in time. Oil marketing basket, yeah, BPCL, they actually managed to actually go through the divestment. I think there is a lot of money to be made in BPCL. Goodyear Tires, Yes Bank, I will avoid. PVR and Phoenix Mills, these are still expensive, so I will be careful on them. Raymond, promoter is a mixed bag, so it's a good company. Opening up theme can work, so from that perspective, Raymond might be an interesting bet to look at. Spark, I don't have a trading. South Indian Bank, very cheap, so and the new CEO is interesting, so maybe one has good long-term holding capacity, one can look at South Indian Bank. IGL for short term, not recommended from a short term perspective is what I will say. Adani, Bajaj Finserv still has some traction. Adani is in a different zone, so I will not comment much on Adani. Koa Carbon, I do not know. MCX is an interesting company from long term. Graphite is a good bet from a short term perspective to medium term perspective also. Aditya Green, I will not be Adani Enterprises. Bajaj Finserv is still a decent bet. HDFC Limited, one can look at HDFC. These are all long-term holdings. Vodafone, avoid. I would exit Vodafone because still the long-term prospects are not clear. HCC, very, very tricky. PVR, I'm not expecting much of an upside. It is just a trading play at this point in time. Coal India is also is a dividend yield play. Warren Beverages is a good stock to own. Prince Pipe is also decent stock to own. Okay, KNR and Tidewater, I do not have much of an idea. Can you give 4 picks? I've given a lot of picks. So there are 15 picks that we are sharing from 2 to 3 years perspective, right? So these are all 1 year perspective picks. I did give you a couple of ideas from 2 years perspective, which is stocks like Rain Industries. Sugar might still be a good sector to own from a couple of years perspective because there is a structural play of ethanol blending. So there are many things which are happening. That's interesting to look at. So I guess I have covered most of the questions. So I've covered almost all the questions. So thank you, everybody. Thank you for taking time out to attend our session. It was very, very interesting. we like. I'm really very sorry that I can't give you a view on Nifty and Bank Nifty June series. This is more of technical. I'll take this last question. Is on UPL. UPL is an interesting stock to own from both medium term and long term perspective. There are corporate governance challenges which have been there, but however, I think that if I would say that the business is very very strong at this point in time, so one can look at UPL from that perspective. That's about it. So, can I buy rail industry at this point in time? The answer to that is yes. RCTC, I will avoid. NTPC it's a dividend yield play. Lawrence Lab, it's run up quite a bit, so I will avoid at this point in time. Axis Bank, I'm sorry, I cannot comment. Thank you, thank you. I'm sorry if I have missed out any question. I have tried to answer most of the question. I'm really, if maybe I do not know the answer to your question, but yeah, I've tried to answer most of the question. This is available on the website in the research section. You can you can type topics to get the detailed presentation, and you will be able to access it. So that's it from me. Thank you. Oh, okay, which sugar stock you recommended? So I said Dalmia, Bharat Sugar, Triveni Engineering, and we can only have Triveni Engineering one can look at. And of course, the other name was, let's say, equipment manufacturer, which is Praj Industries. These are sugar related plays which are interesting at this juncture. That's it. Camps, I'm not too sure what to do. That's it. Thank you, everybody, for taking time to attend our session. This was a very, very engaging session. Thank you, everybody. Cadila Healthcare. Oh, anyways, one last question. There is one. Cadila Healthcare is a good stock to own, but it's run up quite a bit. It's become expensive, so I will wait for a correction. Then probably I'll keep it under my watch list. If there's a correction, I will buy it. It's a good stock to own. So from that perspective, Cadila is a good company, but not at this juncture. It's run up quite a bit. Trading view on Spark. I don't have a trading view on Spark. I'm really very sorry. DCB, I will avoid at this point in time. Thank you.